Welcome back to another weekly market and financial update. So, today is the big day, Election Day, November 6th, 2024. And there is a lot going on that we're going to be talking about. So, I have preached for the last 12 months or so, and anyone that's watched these videos knows I love this saying, keep your emotions for the polls and not for your stock market portfolio, right? Keep your opinions for when you vote, which is today. So I'm glad all of us now, all those bottled up emotions that we kept out of our investment portfolio, we can rush right to the polls and cast our votes. So all jokes aside, I hope everyone gets the chance to vote today. I hope that they make their vote in good faith for the candidate they feel is best suited to run our country for the next 4 years. So with that in mind, let's talk about some of the implications and how the stock market typically reacts to an election at any given time throughout the course of history. So if we look at S&P 500 trends leading all the way back to 1928 through 2020, the last election, there are some averages that we can actually use to help us make decisions around our investment strategies. Now, I will be honest with you, the S&P 500 does tend to struggle the first month or so after an election. It's actually relatively flat on average, or maybe even a little bit negative. I'm going to post a chart on the screen for you here so we can take a look at different time frames and S&P 500 averages. Now, of course, this is no indication of what's going to happen for this election and moving forward. It's just good for us to feel somewhat reassured if there's a lot of trepidation or nervousness that any of us might be experiencing, given the fact that the last few elections have not gone as smoothly as some of us may hope. A lot of us remember the January 6th incident in 2020. So we know what has happened historically, but this could actually be some good news for the markets, and we'll talk about that in a little bit. 3 to 6 months post-election, the S&P 500 actually tends to do pretty well. About 3 months after the election, the S&P 500 on average historically is up just about 2.2%, and 6 months after an election, it's actually up about 4.4%. So you can love or hate the candidate that gets elected into office, but the markets honestly could care less. They just care what the rest of the economy is doing, and they will shift with the trends based off of that new party in power, right? So, and another thing that we're going to talk a little bit about too is some of us remember very clearly, a lot of us remember very clearly January 6th and what happened on that day. And while nobody wants this to happen again, markets have already experienced this type of event. And there actually is some battle testing that the markets have gone through, especially during transition when things are not as peaceful and political tensions rise domestically and internationally. So this actually could be a good thing for markets because they've gone through this, meaning that it's like when someone gets sick, right? The doctor always says if a little kid gets sick the first time, they tend to get really sick. And then if they get sick again, they tend to not get as sick because their body has already dealt with it once, right? They've built up antibodies in their immune system, and their body has the ability to fight off future infections. And markets sometimes have a similar effect where they actually build up antibodies throughout different periods of time in history, and they become a little bit less sensitive to certain events that happen, right? They've experienced one event before, and if that event happens again, it's less likely there will be extended volatility or heightened volatility during those events. So again, I'm not wishing that this happens, right? But if something like this does happen and there's not a peaceful transition of power, yes, it's going to be all over the news, but I think the market has more wherewithal than when it once did 4 years ago or 8 years ago during these transitions. So it's just something to keep in mind throughout the election process, especially if we don't get the results right away. If there are some swing states that are having very, very close calls, right? In some states, it's very clear. Typically, I live in New Jersey. New Jersey is historically a blue state, right? So New Jersey will historically call their results very, very early and say, we're blue. Other states such as Pennsylvania, Arizona, maybe even Florida sometimes, these states tend to change how their voter demographic is made up of and who votes at any given time. So if this delays the process, then that could actually cause some market volatility over the next week or so. Again, if we don't get results very quickly. If we get the results pretty quickly and it's clear and obvious who is going to be in office, whether it's Harris or Trump, then I think the risk of volatility on that end of the spectrum will be pretty low. Now, we have gotten some calls from folks over the last few weeks about just overall nervousness and saying, should I be moving my money into cash? Should I be buying a CD? Should I be becoming more conservative? And at the end of the day, you have to make a decision that makes you feel comfortable at night, where you can put your pillow on the head and say, your head on the pillow, and you can say, I'm comfortable with these decisions. Sometimes folks will want to get out of the market altogether. And the most important aspect of getting out of the market altogether is to have a plan to get back into the market. So if you really are feeling uncomfortable about the election, if you're feeling uncomfortable about the risks in the market at this present time, and you do want to divest and pull your money out of the market, just make sure you have a plan to get back in. So many times we see folks pull money out of the market due to their nervousness, or they feel that they would just be more comfortable leaving their money on the sidelines. And it's not a bad thing to do that by any means. I'm not saying people shouldn't do this. I'm not saying people should run to put their money into a money market fund, but just make sure you have a plan to get back, right? You can say, okay, after 3 months, I'm going to put my money back in the market, or I'm going to have a dollar cost average strategy, or I'm going to do it at a set of intervals, or when this news comes out, right? It doesn't really matter what you choose. Just make sure you have a plan to get back in the market. That's probably one of the most important strategies any investor can have, especially if they divest. So let's transition a little bit and talk about some of the potential winners and losers of the election, depending upon who gets into office. Now, if you attended our webinar a couple weeks ago, we talked about this during our third quarter webinar about some of the implications if Trump wins or Harris wins, right? So let's talk a little bit about Harris, just because she's top of mind for me first this morning. So Harris is really focused on alternative energy, electric cars, clean energy, right? So I think those potential winners are there. Now, a lot of people have talked about tariffs and international tax rates. And keep in mind, the Biden administration actually extended all of the Trump tariffs when Trump was in office. So I think it's very, very likely that either party, Harris or Trump, will keep those tariffs alive, especially with the ongoing issues with Russia invading Ukraine. That war is still ongoing, and the U.S. wants to do what they can to put sanctions on Russia and put tariffs there, as well as other foreign national powers, right? China is another big one where we might see illegal goods, drugs, AI coming out of China, and the Trump administration administered a lot of tariffs on China. Biden extended those tariffs, and it's pretty likely that Harris will actually continue those tariffs as well. Trump, on the other hand, will likely increase the tariffs even more than what was already enacted back when he was originally in office. So either way, tariffs have a very, very high chance to stick around, and they will continue to be an important role in the way that the United States deals with other geopolitical nations and how we handle relations, especially if there's a lot of tensions. And really, China is going to be the biggest target, if you will, from the United States and how we handle our foreign policies. So either way, Harris or Trump, right? Harris, again, we talked about the clean energy. Trump is going to favor more oil, gas, natural gas. So we can see some of these industries probably being more favored. Harris on the banking side wants to deregulate a little bit. So, Trump is the one that wants to deregulate a little bit. Harris wants to actually tighten it. So we can see Harris actually keeping Fed Chair Jerome Powell in office, where if Trump gets in, then it's likely that Jerome Powell will actually shift to another chair. So depending upon who gets in office, right, the banking sectors may do a little bit better or do a little bit worse, right? And there's reasons why we talk about this. So when thinking about the different industries that are going to be impacted and what's going to be happening, really it's important whether you're in love with the candidate that gets elected or you hate the candidate that gets elected, regardless of the fact your stock portfolio does not care about that whatsoever, right? Stocks don't have emotions. They're not people, right? They're inanimate objects, and they're going to do what they're going to do. And we can use that information knowing that there's no emotions with stocks, right? We have emotions, but our stock portfolio doesn't. And we talk about the different winners and losers because strategically we can then make decisions based off of who gets into office, right? Well, we can say, hey, Donald Trump was elected, so I want to actually become a little bit more energy focused in my portfolio, and I want to maybe shift out of some technology, some electric vehicle stocks. I want to maybe shift out of some international stocks because Trump will likely put more sanctions and tariffs on international companies, which will hurt their profitability, right? So we can use these data points based off of which candidate, the policies they favor to make decisions with our portfolio, right? And if Kamala Harris gets elected, well, it's the same thing, right? We can say, okay, Kamala Harris does not favor oil, natural gas, but she favors more technology, electric vehicles. The tariffs will stay, but they won't be as big of an impact. So maybe I'm more comfortable keeping some international exposure, right? The Tax Cuts and Jobs Act is really probably going to be one of the biggest pieces of legislation that is up for renewal. And either way, whoever gets elected has to deal with this, by the way. The Tax Cuts and Jobs Act will sunset in 2026. And we've talked about this in length in some of our other webinars and workshops, so I'm not going to get into it too much in this video today. But if you do have questions about this, you're always welcome to reach out, and I'm happy to discuss with you the tax implications of tax laws today and how they're going to likely change in a couple years. So when the tax laws sunset, Harris is probably more likely to do a total revamping of tax laws and become more favorable towards child tax credits and Medicare credits. And on the flip side, Trump is going to probably try to keep as much as he can under the Tax Cuts and Jobs Act. I don't think he'll be able to keep everything that was originally enacted, but he will try to keep a large portion of it. And I think some of those tax laws will be a little bit more favorable to some folks, and some of them will not be favorable to others. So again, it's impossible to say how the tax laws will affect each and every one of us now, but it is going to change in 2026, no matter what, whether something gets passed or it doesn't get passed. The tax laws are scheduled to sunset. So Congress and the president, they have some decisions they're going to have to make in regards to the tax law. And even if they don't make any decisions, then the tax laws will revert to the prior rules in a higher tax rate environment on average for most folks. So taxes have become a cornerstone of the planning here at Vision Retirement. A lot of you know we recently merged with an accounting practice. So taxes are really, really important to a lot of folks, including us, and how we make decisions in our overall financial planning, our retirement strategies, and our investment portfolios, right? So there's a lot of things to consider here. Again, at the end of the day, we're going to vote for who we want to vote for most, the person we believe that will do the best job for our country over the next 4 years. And that's the beauty of being an American citizen. And either way, the outcome of this election, it's just important to keep in the back of your mind that the emotions behind your portfolio are not going to matter, right? The emotions are not going to have any effect on whether your stock market portfolio is going to go up or go down. It's simply going to be due to the economic conditions at the time and the actual positions that you own and how they are interacting with the current economic conditions. So again, these are things we're just going to be talking about. I know this video was a lot longer today, but today is a very big day in U.S. history. So I felt that it was important to discuss a lot of these different aspects and hopefully ease a little bit of worries for those of us that are worried about the outcome of today. And just know that no matter what happens, it's not the end of the world, right? I mean, of course, there's always a chance that we could be subject to doom and gloom, but I mean, the chances of that happening, whether Trump or Harris gets in power, is really so low that it's not even a topic of discussion for today's video. The things that I want everyone to take away from today is that just keep in mind the election is going to happen. It'll either go the way you want or it'll go the way you don't want. But no matter what, your stock market portfolio is really going to be dictated by the policies that will be enacted by the new president, as well as the economic conditions at the given time, as well as the forecast of conditions over the next 3 to 6 months at that point, right? So it's November, so we're looking into February, March, April at this point at Vision Retirement, and the decisions we make for our clients and their investment management strategies. So just keep this in mind. I know elections can cause a lot of anxiety for a lot of people, but I hope this video helps and has provided some comfort and education to those of you that are listening today. As always, I really appreciate everyone tuning in. Hopefully next week's video, we'll talk about who actually got into office, and then we can talk about the true implications of what's likely to happen based off of who's elected, whether it's Trump or Harris, and hopefully there is a peaceful transition of power in January. So thank you so much for tuning in. I hope everyone gets the ability to get out there and vote today to cast their opinions and views on what this country should do. And thank you again so much for watching, and I'll see everyone next week.